Yeah, well, I think gold was a little bit of a crowded play. I think the whole kind of world economy, when they get nervous, they move to gold. So that is, that's where I think a lot of emotional money has been moving, and there's been a lot of FOMO. A lot of people I talk to who aren't in gold have been painfully watching it go higher, and they all want to get in. And so I think we're just seeing some profit taking. We've had the news with the tariffs, kind of another delay, a pause of tariffs. And so that is strengthening the U.S. dollar. The dollar is going up, so gold's falling in kind of the inverse relationship. So we're just seeing, I think, some profit taking, people moving out of that play, thinking there might be some good news that come out of the China tariff deal down the road. So I think it's just that everybody who piled in is now nervous, and now they're kind of quickly pulling back the reins. And whatever moves up the most is usually the one that pulls back the most. And gold has definitely been outperforming. Silver has been struggling, and so that's I think the reason for silver really just holding its ground today, while gold kind of takes a bit of a beating.
Now, if we look at the charts, what is your technical what is your pulse on the gold market at the moment? And do you see further sell-off coming?
Yeah, I mean, if we take a look at the gold market, if we pull up gold here, gold has had a very nice move. It's recently pulled back. We've been slowly kind of actively trading this. We did get into a gold trade. We closed some out a few days ago, and gold has kind of made this, is having a pause. This is a significant level. Gold could still consolidate here and move up based on the charts. Gold has the potential to rally to $3,750, which is a substantial move to the upside from where we are right now. That's somewhere up to this range. So gold is in a bull market phase. You don't want to bet against it. What's really interesting, Elijah, is when we look at the monthly chart of gold and kind of zoom out on the big picture. I think you and I may have touched on this before, but I use Fibonacci extensions, which is the golden sequence, to identify where price targets for gold are to the upside. And we've hit multiple 100% measured moves in gold over time. And these levels that I'm drawing are kind of where gold has hit rough Fibonacci targets. And what's really interesting here is each time we've hit a target and then gold has blown past it and become that kind of crowded play where we really just see it kind of drift higher and move up. Each time it's done this, including the big one we've seen right now, has been about 22 to 24% move to the upside from the 100% targets we were looking for. And so I find it very interesting that each time we've done this, we've gone into a multi-year pause or a financial reset. And it's not that everybody in the world is like piling into gold. It's actually, a very tiny percentage of most portfolios, most advisors. But the thing is, people who do hold gold right now, they know we're in a bull market phase and they don't want to sell it. And so it doesn't take much buying for gold to just quickly drift higher, because anybody who has it says, well, I'll sell it to you, but give me, pay me through the nose for it. And so that's why we see gold in these phases here drift higher very easily. So I am, based on that, short-term wise, as I told you, I think there's potential for gold to maybe push a little bit higher. But overall, based on historical price action and percentage moves, it is indicating that gold may have actually kind of had the top here, and we're going to see a bigger pause and correction with the overall economy and the stock market, and pull back and give us a pause. The last time we've had a pause like this, where we went into an economic kind of crisis and a financial reset, was in 2008, and gold pulled back about 34%. So in a perfect world, that's what we'd see here. We see gold pull back with the stock market over the next 4, 5, 6 months, and then gold would probably be off to the races after that. So short term, you don't want to bet against it. It's still bullish, but when you look at the big picture, all the signs are there, including these monthly charts, these candle wicks. If we just zoom in, When price runs up and then gets slammed down and then runs up again and gets slammed down, that's usually a sign that the market is a little bit exhausted. And the big question is this an exhaustion move and it's going to break down and unwind like I think it might? Or is it just a pause, a consolidation before it pushes up for that next leg higher? And that's the nice thing about technical analysis is we follow price. We don't pick a top or a bottom. We just wait for a trend to start or continue, and then we jump on and trade that. So I'm still bullish on gold, but you got to be aware it is in definitely a unique situation of, there's limited upside and potentially more downside or wasted time if you were to move into it right now. It could take a little while to mature before it has the next big leg to the upside.